New York lunch is a 2-hour window of time. We had relative equal highs here in the afternoon going into 1:30 when New York lunch ends, and then the opening range for PM session begins until 2 o'clock Eastern time. That's what this is here. Okay. But I want you to take a look at how this buy side was taken ahead of the 1:30 close on New York lunch. That's not random. Okay. So this run on buy side liquidity prior to that happening, go right into this candlestick right there. That is a buy side imbalance, sell side inefficiency right before the liquidity was taken during New York lunch. So this is an algorithmic price delivery. It's not buying pressure, just as much as it's not selling pressure that drove it down. So here, if this was bullish, one would expect it to trade down into it and go higher. Not at this time of day. It's going to go back and seek liquidity. What liquidity? What's it going to look for? You got to go back and consider at 10 o'clock, start going through. Here's a sell side liquidity pool. There's a sell side liquidity pool, and it's part of first percent of fair value gap, which is that darker red line. And you have this as well. Okay, so you have several factors where you can use the retracement lower in PM session. Between these two vertical lines, that is the opening range for PM trading in indices. 1:30 Eastern time to 2 p.m. Eastern time. First presented fair value gap here. Displacement. Trades up into it. There you go. First presented fair value gap. Shorting hits it here. This buy side imbalance, sell side inefficiency is now changing its characteristic to inversion fair value gap. Drops aggressively into first presented fair value gap. Look at the bodies respecting it. It's probably random. So now what I'm going to do is I'm going to take this here and I'm going to extend it to the right. It's part of this lunchtime reversal. So we're not looking at a classic, here's an old high, let's put a line on it that's support resistance. Here's a classic high, let's put a trend line on it and call it resistance. That's not what we're doing here, okay? We're not doing it with that high. We're doing it with the inefficiency that sets the tone for a reversal at the time of the New York lunch closing. Everything in here sets the stage for revisiting these specific PD arrays. This one here starts with a BISI, turns to an inversion fair value gap. So price trading up to this is a reason to anticipate lower prices. So now we're going to go and move forward in time. Price back inside of Tuesday's regular trading hours opening range gap. So price trades up here. There's that inefficiency from yesterday's lunch, New York lunch 2-hour window before the buy side was tagged and rated. There's the 2 price points I told you to be mindful of. And it runs up into it. Look at the body stop right here. And then opens, trades just a little bit outside of it, and then collapses. That's a wonderful opportunity to get in sync with the market on a complex reversal. Okay, so when you're utilizing the 2-hour lunch window, previous day, if you have a reversal after liquidity's been taken, you take that inefficiency right before it takes the liquidity, carry that forward into the next day. If it trades up into it, it can set the tone for a shorting opportunity, reverse it for going long. Now, let's look at the mechanics of what the price action was doing leading up to this. So look at the bodies respecting it here and here. You don't think there's no algorithm? Trades up, hits the high of it here, creates a buy side imbalance, sell side inefficiency, which will later become an inversion fair value gap. Then we have another buy side imbalance, sell side inefficiency, that should act as inversion as well. Why? Because it's going to go up here, this short-term high, and now we're going to be entering that gap here, which is going to offer discount sensitivity first. Hits it here, rallies, comes back up into this buy side imbalance, sell side inefficiency. So this is reclaimed bullish fair value gap there. This one here also nests together, and you have an inversion fair value gap between here. So that's a very, very strong. That's why you got that big pop there. Okay. Price runs right up into my level, what I'm looking for, and it's above this high here. So we have turtle soup scenario. Price trades into it here and then sells off. Now this little area right in here, if you were using it on this 1 minute time frame, you would just be simply anchoring it to this candlestick's high, to that candlestick's low, and you'd still be fine. Okay. But I'm using a very small time frame model, and it afforded me the idea of looking for this, and then when it traded up into here. But this is inversion fair value gap. Now I went short. Again, added pyramiding it. And then price meandered back down into yesterday, Tuesday's regular trading hours opening range gap. If you look at price like this, what is it you see here? Take this wick out for a moment, okay? Just imagine that wick is not there. Do you see original consolidation, accumulation, reaccumulation, smart money reversal, low risk sell, first stage distribution, second stage distribution, and a rarity, when it affords it, it'll give you one more distribution to take out the original consolidation to a level I told you it was going to go to. Now, I already outlined what this is, okay? It's yesterday's New York lunch when they ran buy side. When the buy side's taken, you look for the inefficiency right before the liquidity's taken. That's how you're picking it. You're not picking the fair value gap right before that one, because it's one candle before that one I highlighted. You're picking the one that's formed right before the liquidity is taken, because it's part of a complex reversal, part of a macro time. It's during a New York session lunch yesterday, and it's happening at a time when reversals take place. Go back through your old price action and look at that 2-hour lunch period, and when there is a turtle soup short or long, find that first fair value gap right before the liquidity is taken, carry that over to the next day. If it trades up in there, you're going to get many times the high or low of the day.